Hey everyone, how's it going? This is Gersha from Technical Option Traders Inc. Hope you guys are having a great day. So today we're going to get started about what's going on in the market with Elon Musk buying Twitter. Huge news. Before we begin, just wanted to let you guys know this is our trading community. You can always check it out. You're welcome to join. But today we did well with the SPY puts right in the morning, and then we did nothing at all. We just talked about what was going to happen in the market and just kind of made our way from there because small profits do add up. So it's all about compounding gains, right? So that's something we want to focus on, and we'll see how it all works out for us, right? So let's look at S&P 500. Let's get started here. So if you guys been following me for some time, I've been telling you guys that the S&P 500 is stuck in this range, right? So this is from when the Fed spoke to when the Fed minutes to when Jerome Powell will be speaking. We're tracking this area here. And this area in particular is very frothy area, right? So today we had an aggressive move, and in the morning we had a good opportunity to get some short SPY, but I took profits fast because I knew that this area right now was a demand zone, and that's exactly what we mentioned in our trading community, that this area has been tested multiple times. Multiple time buyers are here, and I would not be surprised if buyers stepped in today once again, and that's exactly what is happening right now. So as the market's moving, the buyers are stepping in, but that does not mean that this is a bullish market. This is a volatile market. Okay, this is just whipsaw back and forth between the bigger ranges at 480 and the shorter level around 410 and 411. Okay, this is a fight between two ranges, and this can go on for some time. If you're a retail trader and you don't have a plan, you will get killed in this market. Okay, this is not a very nice market overall, right? So an important factor to understand here, looking at the hourly time frame, right? SPY has support right around 435, right? So it was unable to hold that support and we collapsed down here. So now, as the market is turning upwards, what we want to patiently watch for is to see how SPY does around this 435 level, right? Does it come back here, right? If it does, how do the buyers step in? Are they more buyers? Are they less buyers? Like, what is happening today? So for the rest of the day today, as you guys can see towards the close, there's been more buyers consistently. And we're going into the close in the last 20 minutes of trading, and buyers are continuing to step in. So what we want to see is a follow through. I am a huge believer in this, and I tell people and all my students in my technical analysis class that, look, if you don't have a follow through and you don't have a plan, the chances are it's not going to work. If we look at the bull market here, right? Every time the stock dipped, right? Stocks went higher, it dipped, and then there was a follow through of volume. Look at the volume here. Even though the candlesticks are small, to push to the next level, you need buyers to be present and sellers to be not really there, right? So they're not really creating resistance, right? So we can see that continuously over and over again. But since January of this year, sellers are showing more consistency. They're selling all the rips. They're pushing the rips down, okay? So now we're getting a bounce from here. So this has been an accepted demand zone test here. Recently 1, 2, and 3 tests overall in the zone. If we break the 411 or the 410 level, expect the market to come down. Okay, we have momentum increasing on the MACD side. We'll see if that shifts over the coming days, but overall the market does not look that the best right now. It's heavily volatile. It's very tricky to trade, right? So looking at the Qs are bouncing just like everything else today. We got a death cross, a retest of this demand zone again. If the Qs lose the 317 and the 315 level, we will see an epic collapse in the Qs going all the way down to probably around 297, 300 level. Okay, that will be a big loss of momentum for tech. And as you can see, tech is pretty much flat, right? So in all time frames, it's flat on the weekly, right? On the monthly, it's not looking so good, right? This is a right angle broadening formation going on here. So there's a lot going on in tech. But however, what we want to look at as day trading, right? We want to see here if tech can get above the 335 level. Okay, if it can get above the 335 level and consolidate here, it can make a move higher as long as buyers step in. Okay, it is forming like a hammer candle right here. Well, it is forming a bullish candle here, but the next few days will matter for tech. Okay, so this is not ready to exactly blow up to the upside. Okay, look at Dow Jones here. So if we look at the Dow Jones and average here, right? So it's in two ranges once again, not a lot going on. Had a downtrend break, was testing this level, holding. If this level held, could have pushed higher. It tried to, but the retest of this level, unable to hold. and we had a sell-off to here. But this is still a higher low compared to this, so we want to wait and see if we do get some momentum to the upside this way. If we don't, and it continues to slowly grind down, that won't be a good sign for the market. A lot of these stocks will continue to break down. Okay, so that's something to keep an eye on. So if we look at the VIX here, the VIX is on the upside. So before we get into the VIX, I want to look at IWM. IWM, look at this. This is a complete breakdown. This is a bearish formation here. It's completely breaking down here. If it breaks down 187, we're going all the way down to 170, okay? So that's something to keep in mind of, guys. So be careful when you're trading out there, okay? So this market is not really bullish. It's not really bearish. It's volatile. Manage your risk. And I mean that. Manage your risk as much as possible. If you do not manage your risk, your chances of making money decrease substantially, especially in the sideways market, okay? So that's something we want to focus on here, right? So if we look at the VIX here, the VIX has this inverted head and shoulder going on, but we need a break of 32 to go higher here. But right now, it's not really breaking down either. It's just consolidating between this level. So that's something to keep an eye on. It's not, so VIX is holding up, right? It's above the 50, but it's below the 20. So this is an area that we want to watch for, is that do we get a breakout or a breakdown? Right, so that's something we want to pay attention to. Okay, if we get a breakout, it could be a big one, and you know, this market, this rally that we're seeing right now could get faded in just a matter of seconds, right? So do not get attached to something. Just always have a open mind, an open approach to everything that you're looking at all times. So looking at gold here, gold unfortunately took a beating. So that's just the way things go. I'm bullish gold as long as it stays above 175. That's my level. That's been my level. I'm gonna stick to that. If it breaks below that, I won't get bearish, but I'll reassess at a better entry to get into gold, because on a monthly time frame, it is starting to look a little bit frothy for gold because we got these long wicks here, right? But this is a cup and handle formation that is forming. So I'm not gonna rule out gold just yet, like a lot of people are doing right now. You know, I'm still bullish gold, and I think it's gonna have its day someday, very very soon. It could be after the Fed speak May 2nd, so that's something to pay attention to. Okay, so with the Fed speaking, there could be a lot of volatility coming into the market, and the interest rate hikes that are planned. So if there's an interest rate shock, that could be a big thing. If there's no interest rate shock, it's going to be fine, right? So then maybe gold will come down to the 175 level. So that's something I'll get out from, and I'll just kind of observe from the sidelines, right? So the other thing to keep in mind of today is ARK. ARK is just getting killed. So a lot of these stocks are making these rallies, but these rallies may not be real. Just remember that, okay? Whenever a stock goes in one direction, this is what we call a volatility trap. A lot of market makers will come in. They can start covering their positions if they're short, or they will start selling puts to stop out a lot of buyers or put buyers, and kind of start to push the market up and just increase the volatility or do a volatility crunch. So there's multiple things that happen at any given time in the stock market. It does not just keep going in one direction. A bullish market does not just keep going up and up. It has a series of highs and lows, right? It just has higher highs and higher lows. But there are waves, so you have to remember that. So right now we can get a pullback in ARK, no problem, but it does not mean it's getting bullish. So just remember that certain levels have to be defeated, certain criteria has to be met. So don't just start assuming that things are getting bullish when they're not. Okay, K-Web, China, this is just getting killed. China is absolutely getting wrecked. I am not bullish China at all. It's in consolidation. If I'm gonna take a bullish trade, I probably will take it on the upside here around the 30 to 40. But until then, I'm not bullish China. Just kind of watching this. It needs to get above this level so it can start consolidating here. If it doesn't, it's just going to slowly grind its way down. All right, guys. So the other thing to keep in mind on is how the sectors are doing. So right now, the sectors that are up today are home builders, retail, okay, tech, communications, semiconductors, XLV. But if you look at these bigger pictures, XLV is still fine. Okay, it had a pullback to the 200 and it bounced. It's below the 50, so I'm not really trading healthcare. Semiconductors are just really holding on for support. of dear life right here. The 232, if this breaks, the 223 is a big level. If that goes, Nvidia and AMD are pretty much gone to the downside. So they're really holding this level right here on the semiconductors. May not be ready to go just yet, right? Looking at the financials are having a little bounce here. But if we look at the financials here, right, so they're bouncing off this level. So the important level on financials is actually right about here at 34. If this breaks, yeah, we can go down a lot to about 33 or even around 31. So that's something to keep an eye on. Financials are nearing a death cross here, but that's not happening just yet. It's starting to bounce out the support level. But the fact that this level has been tested multiple times does not give me confidence in this market. Okay, so just remember that. So even with S&P 500, right, it's testing this demand zone one too many times. That's not healthy for me, right? I'll wait, and I'm bullish above 460, like I said before. But right now, this market is volatile. It is non-directional. It is volatile. It is messy. It is hard to trade. So just be careful when you're out there trading. Take quick profits. Okay, it's better to take quick profits and then have regrets if you don't take them and you leave money on the table. Right, guys? So trade safe. If you guys have any questions and concerns, you guys are free to reach out to me, and I'll see you guys tomorrow.